If you want to outperform the S&P 500, I have discovered 5 ETFs that can skyrocket your investments and boost your portfolio faster than ever. Looking for higher returns and you're okay with a bit of more risks, then this video is for you. If you've been watching this channel for a while, you will know that I'm a big fan of ETFs and index funds, especially if you're investing for the long term. And that's simply because the data shows that people that pick stocks don't beat the market in the long run. But after extensive research, I have found out that there are 5 ETFs that have outperformed the S&P 500 that I've recommended to a lot of people for a while. So let's dive into those ETFs. We would evaluate these ETFs based on the following criteria. One would be their fees. You know I'm big on fees. One would be their returns for 3, 5 and 10 years. And lastly, we'll compare them to Vanguard's version of the S&P 500. And this is called the VUSA. The VUSA is Vanguard's version of the S&P 500, like I just said. And the S&P 500 tracks the largest 500 companies in the US. As of today, the top 10 companies in these funds are Microsoft, Apple, Nvidia, Amazon, Alphabet, which is the parent company for Google, Facebook, Eli Lilly, Broadcom. And while it's great to own a part of all these companies, the best part are the fees that you will pay with the Vanguard S&P 500 is 0.07%. That means that for every £10,000 you invest, you only pay £7 in fees per year. That's very, very cheap. Now let's look at what the past returns of the VUSA has given us for the past 3, 5 and 10 years. If we go back to Vanguard's website, we see that the annualized performance for the past 3, 5 and 10 years for this fund is 9%, 15% and 12% respectively, while the fund has returned 14% since its inception. Now these are very good numbers, and just for our understanding, the annualized performance is a measure of how much an investment has performed on average over each year. That means that over that period or over a certain period, the ETF might have dipped or performed very well, but on average on a yearly basis it gives those numbers. I don't know, I hope that makes sense. And also that means that if you invested, let's say for example, £1,000 10 years ago, given those numbers, you would have £3,192 today without adding any more dime. So with all that said, the first ETF that we'll look at is the Invesco Nasdaq 100 ETF with the symbol EQQQ. This includes 100 of the largest US and international non-financial companies that are listed on the Nasdaq Stock Exchange, and this is based on market capitalization. The Nasdaq Stock Exchange is generally known for its high concentration on technology and internet-based stocks or companies, and the top holdings for this EQQQ is Microsoft, Nvidia, Apple, Amazon, Meta, which is Facebook, Broadcom, Alphabet, Costco, and Tesla, very similar to the Vanguard S&P 500, and the fees are 0.3%. We can also see that the annualized performance for the past 3, 5, and 10 years for these funds is 11%, 21.6%, and 18%. Let's compare what the return would look like between the EQQQ and the VUSA, which is Vanguard S&P 500, and we will do that by investing £1,000, and this is what the figures would look like after 3 years, 5 years, and 10 years without adding any other dime. And of course, you know that past performance is not an indication of future performance, but these are some good numbers. The next ETF we would like to look at is the iShares S&P 500 Information Technology Sector ETF. Remember that we are comparing these ETFs to the S&P 500, which are the top 500 companies in the US. Well, these funds focus on the IT companies that are a part of the S&P 500. So while the S&P 500 would have companies in different industries, this is like a subset that only focuses on technology companies. This ETF has 65 companies in it, and its top holdings are Microsoft, Nvidia, Apple, Broadcom, Broadcom, AMD, Salesforce, Adobe, Oracle, you name it. Its expense ratio or the cost is 0.15%. Its annualized returns for the past 3, 5, and 10 years are 18.6, 26.6, and because this fund is not up to 10 years, so there is no 10-year annualized return. This fund was created in 2015 and it's just coming up to its 9th anniversary. But the annualized return from inception is 22.82%, which is very, very impressive. Now, using the same analogy and investing £1,000 from inception, these funds would have £6,800. Personally, I'm invested in these funds and I prefer it to the EQQQ, even though they are very, very similar. And also because you could see that it has lower fees and of course it's performing a lot better. The next ETF that we'll look at is the Van Eck Semiconductor ETF with the ticker symbol SMH. And this offers investors the chance to tap into the booming semiconductor sector. Now, this sector is the lifeblood of modern technology as we know it. It powers everything from smartphones, computers, cars, medical devices. In fact, without semiconductors, many things in this tech-driven world would not be successful, would not be possible. It will come to a perfect standstill and stop. This sector is so much of a big deal that we see headlines like this about global chip wars or political tension becoming increasingly common because of Taiwan's dominance in the semiconductor production. And the truth is, as our reliance for this technology grows, so too would our demand for this chip also increase. No, not that chips, I mean this one. And the way I see it, this industry is even set to expand even further with innovations in AI, 5G, electric vehicles, and the likes. Now let's go back to the ETF. This ETF has 26 companies in it, and its top holdings are Nvidia, Taiwan Semiconductors, Broadcom, Qualcomm, Texas Instruments, and the likes. And it has an expense ratio of 0.35%. Its annualized returns for the past 3, 5, and 10 years are 25.45%, 38.58%, and 27.84%. And that means that if we invested £1,000 10 years ago, you would have £13,000 today, and that's very, very crazy. The next ETF we would like to look at is the UBS S&P 500 ESG ETF with ticker symbol S5SD. This ETF tracks the S&P 500 ESG index, and ESG stands for environmental, social, and governance factors. This offers investors exposure to large cap US companies that consider ESG factors alongside traditional financial metrics. This is perfect for those people that are seeking companies that align with making a positive contribution to society and the environment as a whole. And the truth is, ESG investing has gained significant traction in recent years as more investors are seeking to support companies that are making these positive contributions. The ETF includes a wide range of sectors or industries, ensuring diversification while also adhering to the ESG standard. This ETF has 323 equity holdings as at today, with the top holding including Apple, Microsoft, Eli Lilly, Alphabet, which is Google, Tesla, and so on. And it has an expense ratio of 0.1%. The annualized return for 3 and 5 years are 16.909 and 17.09 respectively, while since inception the annualized return is 18.45%. That means that if we invested £1,000 from its inception, we would have £2,336 today. The next ETF we will look at is the iShares MSCI USA SRI with ticker symbol USSU. This ETF is designed to provide exposure to companies in the US that have outstanding ESG performance. This ETF has 167 equity holdings, with its top holdings including Microsoft, Tesla, Home Depot, Coca-Cola, Pepsi, Adobe, Walt Disney, and Intuit. This ETF has an expense ratio of 0.2%, and its annualized return for the past 3 and 5 years are 12.5 and 16.38% respectively. While it hasn't been around for 10 years, its results since inception has been very, very impressive. And there you have it, the 5 ETFs that have produced better returns than the S&P 500. What are your thoughts? And would you be investing in any of them? Until next time, have a great one.